Now, market structure is extremely vast, and there's a lot of characteristics that you need to understand when taking a look at market structure. And over the next few weeks, I'll be uploading a lot of videos explaining all the different characteristics and all the different ways to look at market structure. Now, in today, what we're going to be speaking about is awareness of where you are, okay? Awareness of your area. What do I mean by this? A lot of people are simply one time frame dimensional. They're on the 1 hour time frame, right? And they see, okay, it's making a low, pull back, low, pull back, low, pull back. So now I should look for another low. Okay, I should look for another low, and I should simply look to sell from the supply and look for another low to be made right here. So that's what people do. But you need to be extremely aware of your area. So there's two ways that you need to take a look at this. Okay, you need to have the understanding of your structure on the time frame that you usually take a look at trades on, the time frame that you take a look at setups from. So this is my 1 hour, and I need a higher time frame. Honestly, you don't need like 4 hour, 2 hour, 7 hour, and look at 7 different time frames. 2 time frames, simplify it. Daily and the 1 hour is all you need, I personally believe. So when I'm on a daily time frame, I take a look at two things. I take a look at my current range, and this is the range where price is currently at. This is my current price. And then I take a look at the previous range. And this previous range is going to determine my points of interest in potential reversal points through obviously going to be support or resistance. Okay, where price could potentially find support here. Where could price potentially find support? And because we understand that we take a look at the market from a premium and discount perspective, you know, the discount is down here and we expect price to tap into somewhere here and react. A lot of the time, as we are right at the top of the range, the sells are more probable as you go down. As you go down, sells are more probable, and you get bigger sells. Okay, so this is why a lot of the time it's very good to be able to catch your setups early. Why? Because the closer you are to the top, the more and the larger that the sell you can expect it to be. Look at this. It's a much larger sell in comparison to as you approach the demands right here, okay, the different demand zones right here, the more discounted area, your ranges are going to be much smaller. So your expectation, okay, of your trade has to be lower as well. Now, when we're taking a look at price right here, a lot of people just continue to sell on the 1 hour time frame, not realizing that on GU, for example, right here on the daily time frame, we just tapped into a daily order block right here. So we just tapped into that daily order block. So now when I'm on the 1 hour time frame and I'm waiting for price to simply pull back, tap into my supply and expect it to sell, it's not a smart thing to do because I'm not aware of where I am in the market. So a lot of people will be interested to sell from here, and it does exactly opposite to that. It breaks that high, price retraces back down, and it pushes higher. So you need to be extremely aware of where you are on the higher time frame. Another thing that you can do, okay, is take a look at your daily candles. You can tell so much of structure. You can tell so much about structure just by looking at the daily candle. So you take a look at the daily candle, and there's two things, okay? Usually I'll look at the daily time frame using 3 candles. The past 3 candles will tell you an extreme amount about a candle and about the structure. So we understand that just because you have, for example, you have a demand right here. You have a demand right here. Just because you have that, it doesn't mean that price is going to reverse. This is where a lot of people get stuck. They believe just because they see the demand on the daily, now it's time to buy. That's not the truth. You need to see a reversal pattern that's usually going to always occur on the daily time frame. And that reversal pattern is simply a market structure shift on the lower time frame. A lot of people have difficulty finding that. So using the daily time frame and just 3 candles, you can actually identify that. It's very simple. So when you take a look at price and how it tapped into the first point of interest right here, look at the candle. Price, the past 3 candles, okay, price broke that low, price broke that low. So essentially, as long as price breaks the previous daily low, we're continuing structure to the downside. Now, before we go further into the video, guys, I just want to bring your attention to the fact that we are currently now passing prop firm challenges. We can pass your prop firm challenge for only $299. Any account size, okay, the cheapest in the industry. There's no one else doing it like us as fast as us. You can see the results here. So we're passing your account. As you know, there's a lot of scams in the industry. So if you're interested in getting your account passed in under 72 hours for only $299, get on to us right now for a trustworthy service. Let's get back into the video. So essentially, when you take a look, as I said, at the 3 previous candles, what you want to see is price failing to break the low of the third candle. I'll just call this the first candle. Failing to break the low and simply just wicking below. And then you want to see the last candle right here break the high. So this is what you want to see. The last candle break the high, and this candle simply just break the low. Now, just by understanding that on its own, I ask myself, where do I believe that this daily candle will expand to? I already seen that price has tapped in. Let's just go back here a second. Let's just pretend we're first of all taking a look at this demand right here. Price taps in. Go back one candle, guys. Price taps in. One candle. Boom. Price taps in. Price breaks the previous low. So where do I believe the next candle to really expand to? I don't believe that price will continue any higher. I do believe that price will break lower. Okay, so the next candle comes in, boom, price, the next daily candle, as expected, the expansion goes lower. Now I see that I have another order block right here, and look what price does. Look at the way the daily candle closes. The daily candle closes like this, a little doji, and we simply just have a wick below. A wick below the previous daily low. So throughout the whole range, most of the candles are breaking the previous daily low. Now, these ones don't really matter because, first of all, we don't even consider a reaction or reversal from any of the areas right here because it's just all imbalances and it's above the equilibrium of that range and it's not in the discount. The only two zones that actually we expect a reversal from is this one and this one. And this one clearly not, because we didn't get any, we didn't get that candlestick pattern essentially that we wanted, but this one we did. Once you see that, guys, once you see that it fails to break that previous low, and ask myself, what is the most probable expansion for that day? So let's say today opened, a new day opened, I would expect it to be up. Okay, because two reasons. I'm not just looking at the candle itself. I already realized that there was actually a tap into an order block. So I was aware, like at this point, I would have been shorting. I stopped shorting here and I look, do I potentially have a reversal to the downside? Reversal to the upside? Here, I don't get that confirmation. So now I'm shorting again. I'm shorting again until I reach this low, this order block right here. And then I look at the confirmation once again, and this time there's absolutely zero reason for me to continue looking for shorts. There's no reason for me to be like, okay, you go to the 1 hour time frame and now it's like, okay, let's look for a short here. Because if you take a look at the daily time frame, just a daily time frame without any other time frame, it's clear that we have made a very, very strong reaction from this order block right here, and we failed to break the previous low. So awareness of where you are in market structure is extremely, extremely important. To recap, we're not only trying to be aware of the market structure on the higher time frame on the previous range where we potentially could find support, you know, to the left, where we could find support to the left, but we also have to be aware of, in order for this to hold, okay, in order for any of these lows, any of these like areas to hold, I need to look at the daily time frame and see, is that daily time frame actually giving me some rejection signs, rejection confirmations, and essentially like a market structure shift? Is it giving me that confirmation? And I ask myself, where does the next daily candle look like it will expand to? If you ask yourself that question, it becomes very, very, very simple. Like, let's say, for example, I'm all the way up here. I ask myself, where does it look like the next daily candle is going to expand to? It gets very, very easy. Okay, it gets very, very easy because I'm right at the top here. I understand there's a lot of imbalances and the daily candle expands to the downside. And once again, I still continually believe it's going to expand to the downside until we start reaching these zones where the daily candle, okay, until we start reaching these zones where the daily candle might look like it's potentially not going to continue going to the downside. And you know what happens? A lot of people, they get stuck in the reversal areas. They get stuck where market structure is extremely, extremely difficult and trying to trade that, lose a lot. And then when market structure acts correct again and it's trending nicely, they end up not catching any of those trades. So a lot of people do get caught and in trouble in these areas. So here's another example on gold, for example. I take a look at my current structure and my previous structure. On my current structure, where do I believe price will go? I do believe that price will go down. I believe that the next daily candle will expand to the downside. Why? Because I still have not hit my discount, which is right here. And this point of interest is where I want to look to buy from, right there. And I believe there's an imbalance as well here. So we let it happen. Boom. Nice. Once again, where does the next daily candle potentially going to expand to? And by understanding this and saying, okay, I believe the daily candle is going to expand to the downside. Obviously, I'm on the lower time frame trying to catch setups and shorts, etc. So it's not, you're not trying to catch it on the daily. You're just looking for that daily structure and trying to find that daily direction just by looking at the daily candles. Once again, boom, the next candle comes in. Perfect. It goes down and expands to the downside once again. Where do I believe the next candle will expand to? I believe it to expand to the downside, but it doesn't break that low. And it just about taps into my demand right here. It misses it by a pip or whatever, but it just about taps into my demand right here, and you can see that support right here. Now I take a look at the market, and don't get me wrong, price might expand to the downside. I'm not saying that it won't, it might, but we're taking a look at the most probable scenario. And at this point, because it failed to break that low, and we've also tapped into potential demand right here, I believe that the next daily candle will expand to the upside. And it does just that. Okay, so price simply just goes down, wicks in to that demand, okay, taps in, fails to break that, like close below that low, and expands to the upside. So what were we doing right here? We were aware of two things. We are aware of structure as it is occurring, just looking at the daily candles, literally 1, 2, 3 candles. That's all we look at. You don't need to take a look at all these candles because they don't matter. You just take a look at these candles right here. But it's not all about just taking a look at the candles themselves. It's being aware of where you are. So I'm aware that I'm within this zone. So the candle structure is now actually more important. Whereas candle structure here is not that important because we're not really at any decisive zone. So it's all about awareness of where you are in market structure. Once you are more aware of where you are in market structure, the decisions on the lower time frame become much, much better. Okay, so that's pretty much it for this video. Hopefully you understood what I'm talking about here. This probably was a little bit of a difficult video and a little bit of a different new angle that you might have not heard of before. So watch it 2 to 3 times if you haven't already. Drop a like on the video, guys. Subscribe, you know, all of that good stuff. And as I said, if you're interested in getting your prop from past with us, go right down and click the link in the description and let's get you past. With that being said, guys, have a great day.